My role is to pretty much assess the risk for both the client and the bank. So once you apply for the loan and you go through the process of speaking with your mortgage banker and your processor, then all that documentation is going to come to me, and I'm going to analyze your credit history, your income history, all of your banking accounts, and then based off of all that, we're going to be able to decide if we're going to be able to loan. Everyone has a different background as far as their employment. You may be self-employed, you may have just graduated from college and have started your first job. So everyone's going to be different. Everyone's going to have different tax returns. If I'm looking at your tax returns and I see that there might be something that wasn't included on the first time, then I would reach out to the processor and to reach out to the borrower to make sure that we have that to get a correct decision on your application. I believe my role is important because it helps to make sure that you can afford the mortgage that you're applying for, and that way you're not overstraining your family and your bills, and that way you don't run the risk of any kind of foreclosure or late payments. As far as from a lending perspective, my job is to make sure that all the mortgages meet government guidelines, so Fannie Mae, Freddie Mac, Ginnie Mae if it's a government loan, and they trust me to ensure that there's an acceptable amount of risk.